Good afternoon. Good afternoon, ladies and gentlemen. Welcome to this session on public-private partnerships. My name is Michael Portillo. I am your moderator in this session. I'd like to add my welcome to the city of Leipzig, which is currently celebrating the 320th anniversary of the creation of its opera house, the 270th anniversary of the creation of its orchestra, and today, May the 22nd, is the 200th birthday of Richard Wagner, who was born here in Leipzig on this date in 1813. I very much hope that we will have a panel today that is in fine voice to compete perhaps with Die Walküre, although I very much hope that they won't be singing in tune, because it is our aim here to have a debate between the panellists. On my far right, let me introduce Alberto González, who is from Cintra Infraestructuras of Spain. Next to him is José Luis Irigoyen, director of the World Bank. In the middle is Jaroslav Beldowski, who's from the Bank Gospodarska Krajowego of Poland. Then we have Gershon Cohen, who is from Scottish Widows Investment Partnerships, and on my immediate right, B.K. Chaturvedi, who is a member of the Planning Commission from the Government of India. So we're going to be discussing public-private partnerships. Public-private partnerships have many arguments in their favour. They are a device by which the expertise of the private sector can be applied both to the financing and the management and the construction of a project. They are a means by which the government of a country can buy certainty for an infrastructure project. They are a means by which governments can transfer risk away from government. They're a way in which governments can perhaps bring forward some infrastructure projects that might otherwise wait. And there are ways in which infrastructure projects can be financed by fairly regular and dependable sources of income, rather than being subjected to the whims of the political cycle and the political decision-making process. So those are very strong theoretical benefits from public-private partnerships, but in practice, have there been some difficulties along the way? Has it been as easy and as successful for governments to transfer risk as is supposed in the theory? What has been the cost of doing that? Have governments in the process properly accounted for the liabilities that they are taking on? Should these liabilities be seen as any different from public sector debt, which they would have incurred if they had chosen to do the project for themselves and directly? Discussing some of these issues yesterday with those panellists that were in Leipzig at that time, it seemed that the panellists were very interested in these issues around risk. They are interested in the circumstances in which contracts which have been let, supposedly for at least a medium-term arrangement, actually come to be renegotiated. They're interested in the question of what is the best deal for transferring risk, and whether transferring risk is always the best deal. There may be some circumstances in which it's still better for governments to do things for themselves. By governments, I may mean an entity in the public sector at any level. And certainly they're very interested in how new models of funding can be attracted. Can we get pension funds and insurance funds, which until now have made a relatively small contribution to infrastructure? Can we get them more involved? And with that last point particularly in mind, it's my great pleasure to invite as our first speaker Gershon Cohen. You've already heard that he's from Scottish Widows Investment Partnerships in the United Kingdom. He's got the red microphone.
Michael, thank you very much. Probably on behalf of us, thank you for some very nice introductions there. It's an interesting panel to be chaired by someone so knowledgeable in the particular subject matter we have, and all the best lines seem to have already been taken, so perhaps I could develop some of those themes. My interest, my organization's interest, is to manage capital to invest in infrastructure. So all forms of infrastructure are of interest to us. And perhaps the one opening comment I would make in order perhaps to spark some interest in the audience and to try and make it later a little bit more interactive is to make the point that PPP, public-private partnerships, PFI, private finance initiative, P3, 3P, whatever terminology is used around the world today, at the end of the day, this is a form of government procurement. It shouldn't be the only form of procurement. There are many forms of ways in which government can procure necessary infrastructure. And it's important to make the point that all major infrastructure, and this is a transport conference, so I'll relate it to transport, all transportation infrastructure decisions are political decisions. And they ought to be. However, this leads to the formidable challenge of bridging shorter-term political horizons over which decisions are made, and a longer-term investment horizon required for making decisions in investing into long-term infrastructure projects. And so, a little bit like searching for the Holy Grail, is to find frameworks that enable this to occur. Many academics have looked into the past as to how things got done in the past, but I don't think it's terribly relevant, because we're here now, and we are faced with formidable challenges to renew and upgrade existing networks that we have in the developing world, to actually put in some form of distribution networks that don't exist, etc., etc. We have problems to deal with, issues to deal with now. So looking to the past, not always a sensible thing to do. Having said that, perhaps let me put my own definition a little bit around PPP to put it into context. In some ways, we're pioneers, those that have been involved in PPP. Personally, I'm only 23, by the way. I may look like 60, but that's a function of having spent the last 15 years in the PPP sector looking at how to develop PPP projects and frameworks in UK, Europe, and around the world. And my take on it is as follows, slightly different to the definition that in Michael's introduction, and that is, we are pioneers in the creation and whole life management of strategically important infrastructure projects that provide the platform on which countries can support growth and jobs and social responsibility through a prescribed framework that should create a sustainable working partnership and aligns the interests of both public and private parties' skill sets in the allocation of risk and rewards associated with the design, build, operate, manage and finance of such infrastructure. And I think I will copyright and trademark that definition because I think it probably encapsulates a number of things, some very key points that need to be addressed going forward if PPP is going to remain a sustainable and credible method of government procurement going forward. Let's be clear. PPP, as I said earlier, is a form of procurement and should only be used where a value for money, cost-benefit case can be articulated as opposed to any other form of procurement. And issues stem from this last point, where PPP has not subsequently demonstrated value for money, and confusion surrounds the basis for its use in the first place. For example, additional government funding, off-balance sheet liabilities, just to name a few. So I think my task today in some ways in trying to deal with the subject matter will be to come back to issues that will improve what has gone before. Because like all pioneers and frontiersmen, often there's a mixed result. Some fail and some succeed. And in many respects, that has been the history of PPP to date. I would argue, and I'm a very big advocate for PPP, despite the difficulties often of trying to explain the complexities within it, I am an advocate for it because I think it answers more questions around government procurement than any other forms of procurement necessarily do, provided it is used in the right circumstances. and then perhaps we'll come back to that point too.
Gershon, thank you very much indeed. I've got to mention that I had asked the panel to intervene for about 4 minutes, which is what Gershon has done, so that we can have interactivity both amongst the panel and with the audience as well. Could I just ask you, from your position, Gershon, do you believe that in the pension funds and in the insurance funds, there is a vast amount of investment potential, monies that presently are less well employed than they might be if they were diverted to future transport infrastructure projects? Is there an opportunity here, in other words, to use those monies better than they're being used today?
I believe yes, but there has been a considerable educational development around understanding, namely, what infrastructure actually is. And let me just spend maybe 30 seconds on that. In the early days, infrastructure was sold to institutional investors as a stable form of a long-term safe revenues. Amongst many of those projects were toll roads. And as a result of economic decline in certain places around the globe, particularly where those projects were part of the strategic infrastructure, many early investors into that type of infrastructure lost considerable amounts of money. So the understanding of the risk and rewards associated with infrastructure investing is a very key point. PPP is a slightly different ballgame, and in that respect, PPP ought to provide much more definition and clarity around some of those risks, which ought to therefore make it a very promising and desirable place, particularly for investors that have very long-term liabilities, in order to match those with those assets that produce long-term stable cash flows and revenues.
Very clear. Thank you very much. I'm going to call on Alberto González Lalueza next. As you've already heard, he's from Cintra Infraestructuras of Spain.
Well, first of all, thanks for the opportunity to participate in this panel. It's always a great chance to be heard and to bring your ideas out in the public world. We in Cintra, we are developers of private infrastructure, one of the largest in the world in the toll road sector. So we are definitely advocates of the PPP model. There's been a few things mentioned already about the PPP industry. As Gershon mentioned, I think PPP should be looked at as a tool in the toolbox, not as the only tool available to develop infrastructure. PPPs only make sense under certain circumstances and for certain types of projects. And then within PPPs is, again, a very broad term, and there's many different types of assets with very different characteristics, and each project should be analyzed individually to determine the value of one PPP model or the other. When we look at unsuccessful PPPs, most of the times you can realize that the fundamental problem was that the asset wasn't essential in itself. If the economic value of the project wasn't there from the beginning, and projections were inflated, first from the public bodies, which are responsible for the population growth estimations, their economic estimations, etc., and then probably even boosted forward by the private developers, you come up with apparently very robust and attractive projects, when the reality is that the purpose that those projects served wasn't there. They were not addressing a real need. And as soon as anything goes wrong, that deficiency is immediately reflected, and the asset is in trouble. I think that there's a very important role in the planning stages and in the definition of the PPP, the contract, the procurement process. Make sure that the deals are structured in the right way, that the incentives are in the right way, the risks are allocated to the right party, which, even though there's a long experience in PPPs, I don't think we've managed to come up with the magic recipe that fits all the projects. Those are just some initial thoughts for the discussion. Maybe we can get into some of those points later.
Could I ask you on what you've just said? Some projects have failed. You give the example of a toll road where the prediction of the usage was exaggerated, and it turned out to be less than it was, and it failed. But you also say it's proper that the risk should be allocated to the right party. Now, why is the example you've given a failure? Why isn't it a success? In other words, the government wanted to transfer a risk to the private sector. The private sector had an opportunity to assess that risk. As it turned out, in this particular case, the usage was not as great as people thought. The private sector takes a cold bath. The private sector gets into a financial mess. From the government's point of view, that's pretty good. Surely, sometimes you win, sometimes you lose. Why should the private sector win every time?
I think that the point there is creating a stable environment. If there's that chance to win it all or lose it all, probably the prices will reflect it, and those projects will become much more expensive, because the reward will probably be great, but the chances to fail are also very important, and it will have to be priced accordingly. In terms of what ends up making a project unsuccessful, there are a lot of factors. One is inflated predictions, but then there's also nonsensical behavior by the government. We have time-in projects that are developed as a toll road, and we find ourselves that the government decides to expand the competing route that is free as an alternative, spending more public money to assist or to increase the capacity of a corridor that is already well served by an existing free facility, free or tax-paid facility, and a toll road. And we find ourselves in situations like that, or risk transfer that is inappropriate, such as the environmental risk or some of the permitting risk. Right-of-way in Spain, we've had some very sour experiences where the right-of-way risk is transferred to the private sector. We have no particular advantage in managing that risk. Maybe we can be a little bit more efficient, put more resources, but the reality is that we ended up having to pay the check for the value of the future value of land at much higher prices than they were valued when we estimated the project, because infrastructure creates growth, it brings industry, it brings development. There are things, a lot of factors that end up affecting the potential to fail of a project, and not always in the hand of it's not always the private sector that tries to be over-aggressive or extremely optimistic. There's also actions by the public bodies that are probably not the most sensible at times.
We're going to move our focus away from Europe to India now, and I suspect that BK Chaturvedi will have been quite interested in what he's just been listening to. He's from the Planning Commission of the Government of India, and you have the floor, sir.
When India started its development process, we had a massive deficit of infrastructure, and government didn't have the resources. So we thought of the public-private partnership as a major resource exercise, coupled with government's own funds. In around 10 years back, we had investment in the infrastructure sector of around 4%, 4.5% of GDP. Today, we have around 8% of the GDP. We wanted around $500 billion investments. Of that, more than $200 billion has come from the infrastructure, public-private partnership sources. We have done it in 4 areas: in roads, in port, in airport, and in case of some infrastructure in the rails, though there it has been slightly marginal. We have been able to build the Delhi airport, we have built the Hyderabad airport, we have building the Bangalore airport, major airports we have built up. In the ports, we have built up a number of ports with the help of this, and particularly the wherever the concessions have been given to the private sector in three states, it has done well. More than 500 roads have been built with the help of public-private partnership model, both by the central government and by the, because India is a federal structure, so by the state governments, which are the other entities. We have a model where it has three main features. First, we have developed a model concession agreement which does take into account many of the concerns which we noticed globally had happened. So we did model, our model concession agreement had this. Subsequently, we found there were other concerns raised, and we subsequently revised the model concession agreement to take note of those concerns. And many of the issues where the project fails and what happens, we have tried to take note of that. And how can the developer be appropriately in case he does not want to move forward, or he says that he would like to sell it, then permission to sell it in between. All that is part of the model concession agreements. On the risk sharing business, it is true that since model concession agreement ultimately have willy-nilly a provision that in case the developer who is implementing the roads does not pay the banks will like to have some security. So government has provisions that X% of that amount will be paid by the government, and government will take over the assets. So far, this has not happened in a single case, but if it is required, this is feasible, and to that extent, there is a contingent liability on the government, and that has to be that's a risk which government has to take. On the question of transparency and terms by which these have to be awarded as part of the government procurement, it is absolutely clear that unless that is a part of it, this is doomed to failure. So the point raised by my colleague that as a part of public procurement process, your terms for award of contract have to be absolutely transparent, clear, and that's what we have been emphasizing in government from time to time. And wherever we found that we did not use the award through electronic mode methods, we have started using that so that the whole process becomes much more transparent and clear. So by and large, I will say, first, we feel that we have been reasonably successful. It has helped us in India for building up a large number of roads, airport, port, and in somewhat in rail, in the containers movements. We have been able to develop a fairly transparent methods, and when we come to the discussions of specific issues, I can mention that what are those issues which are there, which has made it transparent. And lastly, we feel that yes, there is a risk involved with the government, but one has to weigh it against the fact that in case government itself was building it, then certainly those roads could also go awry, and those roads could also have a risk. To that extent, one has to weigh the alternate choices instead of seeing that this model is good or bad. So I would like to say this is share my Indian experience with you in this regard.
BK, could I ask you this question? How has the public reacted to this? And I'm thinking of two things. First of all, I assume some of these roads are toll roads. How do the public feel about paying for using the roads? And secondly, you were hinting at the issue of corruption. Has the public accepted that these agreements are done in a transparent manner, or is there a suspicion of corruption around them?
Well, as far as the tolls are concerned, we had a separate set of toll rules made for that. When the toll rules were made, there was a lot of public debate and discussion as to what should be the rates in which area what rate should be fixed and at what rate should they be increased, and we have indexed them to the wholesale price index so that they get revised as and when the wholesale price index gets revised. In certain areas when those roads were being built, the public representatives argued that they were too high, and then finally we considered, when the toll rules were made, we did try and see that the rates are reasonable. So to that extent, we have found that by and large there has been a very broad level of acceptance of this. Of course, at times there have been criticism of A, B, C things, but by and large there has been a very good acceptance. Second, on the question of transparency, we have tried to move to emphasize the transparency, because in one or two cases people mentioned that there is a need for using the IT for award of contracts, so that everyone feels that it is fairly transparent, and we went forward to it so as to improve the confidence of the developers and the people that yes, you were trying to do it in the right manner. In a democracy like India, where there is a wholesale debate whenever anything goes wrong, people feel that there must have been something wrong being done by some politician, some civil servant, some bureaucrat, some developer. It is important that transparency is emphasized. So therefore, we have tried to emphasize this part very much. So by and large, there has been very few criticism of any individual project where it's been alleged that there has been corruption or there has been some unfair practice there in those deals.
Talking of transparency, Leipzig has the distinction that in 1650, the world's very first daily newspaper was begun here in Leipzig. So this is almost the home of the vigorous free press. Now, from India, we move to the world. And our next contributor is José Luis Irigoyen, Director, World Bank.
Thank you. It's a privilege to be here. So let me bring a perspective from the developing world. The context, the funding gap. We have estimated that about $3 trillion to $4 trillion is the funding gap in the developing world. If you look at that gap and you compare with what the 7 multilaterals together can finance in transport, about 17 billion. 3.34 trillion in a decade, so it will be 300 billion per year. And the multilaterals around 17 billion. If you look at, say, what the private sector have achieved, for example, in 2011, around 31.9 billion. So it is a sizable source of funding. However, the main reason probably behind PPPs is not necessarily the financing they bring, but rather the capacity to implement projects and the different kind of services that could be offered through private sector engagement. What have we learned from that experience? The total number sounds interesting, although in reality it's probably less than 10% of the investments in the sector, but has been limited to a few countries. Out of the 68 projects implemented in 2011, 41 were in India and 4 in Brazil. That gives you a sense of the concentration. 5 countries concentrate 50% of the flows that go through PPPs. Also, it's very clear that it's much easier in certain sectors, for example, ports and airports, much easier given the different kind of the user charges that you have and the possibility of charging foreign currency, much easier than roads and railways. However, you have even in the developed world some experiences that the airport in Castrillon that, for example, show that it can go really wrong if planning is not adequately done. And finally, if you look at the flows, how vulnerable they are to crisis. So we remember the 97 crisis in East Asia, now the 2008 crisis, the global financial crisis, and after each crisis it has some impact not only in the amount of funding and the type of projects that could be done, but also the what conditions. And this is very important because you can anticipate that if you look at the future PPPs in the horizon of 10, 15 years, you will face probably more crises, particularly in the developing world. And interestingly, from the 2008 crisis, we learned that, for example, financial conditions are much more stringent now, and the PPPs require more government support. So on average, before the crisis, was say the private share of this PPP funding was about 70%. It went down to 50%. And this is precisely why we have to think in terms of PPPs as a way of procurement and linked to a public investment program. We tend to think in PPPs as generating resources on its own, but the reality is that if you distinguish between who pays, how the infrastructure is funded from who finances a PPP project, you will realize that who pays are either user charges, directly or indirectly, or taxes, taxpayers. So if the estimates that are done, and particularly the effect of this crisis have been the contraction of the economy, and all of a sudden a program that was manageable becomes too big for the country, for the economy, so these adjustments are difficult to manage. So that's why they need to have this public sector perspectives, a public investment program perspective, to ensure that the liabilities created by these programs are controllable, that are manageable. And in that sense, it's pretty obvious that most of PPPs generate liabilities, some contingent liabilities, and some countries have approached it from a prudent fiscal approach, have developed the right mechanisms to not only account for them, but also in some cases to fund them. For example, Chile reports in an annual budget what is the estimated loss of the guarantees that they have provided to support the concession program, and they're kept very reasonably, and they are using also that methodology to screen some projects. For example, a project that have a high political visibility, but that will create contingent liabilities by using the same minimum revenue guarantees that were provided to other concessions in the program, equivalent to 40% of the total program. They decided to put it on hold, delayed implementation. Colombia, for example, learned after the first wave of concessions that they were creating these liabilities, and the guarantees were called. They created a contingency fund, so agencies that want to go ahead with PPP projects, they have to, through a methodology that has been agreed, estimate what are the expected losses and pre-fund them. So there are ways of managing this with prudence. So that's one point. And the other point is the pipeline. So when you go around, many will tell you that the main issue is not the lack of financing. There's liquidity there, although liquidity has changed. It's more on the institutional investor side than commercial banks. But it's the lack of a deep pipeline. And when you think in terms of the pipeline, we immediately think, well, more investment in preparing projects. That's for sure, goes without saying. But behind this is how healthy is a sector and what reforms have to be introduced in a manner that will allow to generate enough resources to compensate for projects. As I mentioned before, in the end, the funding comes from taxpayers or from the sector itself, the user charges that can be levied. So it's very important to have this in mind. And finally, what kind of projects are put to the market and on what conditions? If we are interested in attracting, for example, pension funds and institutional investors, the kind of projects probably would be a project with a different risk profile. In Australia, they call recycling existing assets, probably projects that have reached an operational phase, as opposed to greenfield projects that have all the ramp-up risk, or that will be forced to sequence a project, so we have different kind of financing depending on the level of risk of each stage. So a lot can be improved, but all in all, in the bank, we think that the PPPs have been a tool that has enhanced the options of governments and if prudently managed to achieve some results on the ground and reduce the financial gap. As a result of that, our infrastructure strategy, for example, is one of the three pillars, is to increase the leverage of our lending. Although we provide a significant amount of financing for the transport sector, around 6 billion, 5 billion annually, 10 billion during the financial crisis, that's very little compared to the needs. So if we can leverage other sources of funding, in particular private sector, we can expand and enhance the impact of our operations. So we have introduced several measures, like monitoring this, putting a target and doubling the leveraging, more aggressive use of our risk mitigation instruments. We are in the market with partial credit guarantees, partial risk guarantees, risk insurance, political risk insurance. And thinking of how we design projects that can first reduce the risk, for example, in stages, with a project that did the drilling, for example, for a geothermal plant before, and then we put it to concession once it was clear that the gas was there. Things like that. Or, for example, a toll road project in Africa where we funded the risk that no private sector will take. It was the resettling a large part of the population and creating conditions for building the housing needed and so on, because no one else will do it. So these are ways of, or sequencing projects, for example, these are ways in which we can facilitate this process.
Jose Luis, but by and large, why is the contribution of the private sector to, why is the contribution of PPP in the developing world not as much as you might like it to be? Is it political risk? Is it lack of transparency? Is it uncertainty about the projects themselves? Is it political unwillingness to go down this track? What do you think is the main factor that is preventing this from being more significant than it is today?
Although there are many factors, I think a starting point is how we conceive these projects. The reality is that in a given context, there will be a limited offer. I mentioned 10%, maybe 20% that could put to the market. But unless you introduce center reform, for example, that will allow you to charge tolls that are still considered reasonable, there's going to be a limitation in how far you can go with a PPP. And when you go to a limit in which the government support is so big, then it's better to, rather than consider a project finance kind of scheme that requires a lot of legal fees and very complex structures, you can then do some sort of public sector procurement with a performance-based contract, and you achieve similar results. So there is although it may look limited, the percentage of PPPs or the share of PPPs in a given program, when you look at, say, other ways of engaging the private sector, like through performance-based contracting, you see that, say, many of the countries in the developing world have been able to expand that frontier significantly.
Thank you very much indeed. So now, our last panelist is Jaroslav Beldowski. As you've heard, he's from the Gospodarstwa Krajowego, which is a state-owned bank in Poland, but I think he's going to tell us a bit more about precisely that.
Thank you very much. Good pronunciation, Michael. Let me start with a quote which I like very much from the great British king, Henry VIII. He used to say to his wives, and I believe he had 6, "I will not keep you long." I was asked by Michael not to keep you long. That's for the first one. And I believe at the time when Henry VIII, there were many Scottish widows around the United Kingdom, although Scotland was not part of the United Kingdom. In comparison with the United Kingdom, Poland has not too much experience within PPP. But when you look at the numbers, it's not as bad as you might think. From 2009 up to 2011, we had about 120 projects. So the number is quite good, but the volume of those projects is not very big. I would say that what we could observe now in Poland is that everybody is very interested in PPP. and I would say there are three reasons why everybody is interested. Well, firstly, the European Union is interested in PPP in Poland because they want to expand it, not in numbers but in volume. So that's number one. And we do have some obligations under EU regulations that this is apart from transport, but let's say from environmental side, we have to deliver certain services to citizens. So we have to build some new plans to manage those thresholds. The second driving force is the regions and the municipalities. Because they are reaching, and this is probably the most important one, the ceiling of debt, which is 60% of the revenues they have every year. So now they have to look for the ways to attract new investment. And they also have to think about the future because we expect that we will get EU funds, and then some additional money has to be found in the region or municipalities in order to deliver other projects, EU projects. So what we could observe now is that we don't really have the top-down approach of PPP in Poland. It's rather bottom-up. Okay, so this is one point. And where is BGK, the bank? And just a word about the bank. We are 100% state development bank. We are A- in accordance to Fitch. And we have some implicit guarantee. It's not direct by the state, but it's implicit. So we are thought as the state. But the difference with the German KfW is that we are scrutinized by the Financial Supervision Commission. And this is very serious, and I'm saying that because I also sat, I've been also sitting for 3 years at the Financial Supervision Commission in Poland, and when I became the vice president, I thought that I will have an easy talk with them. It's not true. They are even more nastier than they used to be, you know, when I was there. Okay. One particular project which I would like to show you is that we believe this is a unique one, at least, and this is what European Investment Bank says to us, is that we finance the reconstruction, which is still going on, of the Sopot railway station. That was a visual circle, and that's probably the question. I can give you another example. When Michael was asking why there is PPP, the visual circle was the following. The land belonged to the National Railway Station, the company. The municipality is a small one. It's very, I think it has about 30,000 citizens, inhabitants. It's near Gdańsk. So it's a very famous place to go to the seaside. Okay, but the municipality is not able to buy the land from the National Railway Company. So they thought, well, perhaps we will find the private investor in order to change that railway station. Because I lived there for 1 year, this is something which 30,000 inhabitants really wanted there, because this is a disastrous place now, you know, the railway station. This is a very famous kurort where people go, but the railway station is really bad, okay? So the public support was really high. They found the private investor. The National Railway Station decided to give the land to the private investors, because they promised that when they build the shopping center, this is a real estate project, but not only real estate project. They said, well, they made on the private investors that they will also build a new railway station. So the private investor builds the railway station, builds the shopping center, and also builds a tunnel around the railway station, plus park and ride, because the municipality wanted to have 280 places for the cars, because it was also difficult to manage the cars near the seaside. So what was the role of the bank? We played two roles. We are entrusted by the by the marshal of the region to manage the joint European support for sustainable investment in city areas. This is a very long name. It's called Jessica. Okay, so the Jessica is when you get a cheap loan if you want to really change something in your city. Okay, so we've been asked by the marshal, please get that money to that project. We look at this project and we like it very much because the risk was not very high. We saw that the real estate, the shopping center is going to generate a lot of revenues. So we actually, as the bank, decided to get involved not only through channeling the funds of the European Union, but also to give our money towards the project. So far, as we are told, this is the first project which combines EU funds, private funds. Private funds are meant not only that the private investor, but also the bank which delivers the debt to that project. So I thought, that could be an interesting story for you to hear, because this is not only private, but also getting EU funds involved in sort of transport projects.
Thank you, Jaroslav. You remind me, by the way, that Leipzig has one of the most beautiful, grandest and largest stations in Germany, which now seems to have been largely converted into a shopping centre. So while you're in Leipzig, if you're interested, do go and visit the railway station, which is almost next door to the Westin Hotel. Jaroslav, something you mentioned in passing which interested me. You said the municipalities are approaching their debt ceilings and therefore they're being driven towards PPP. Now, by that, do you mean a virtuous thing? They see the opportunity to bring in private money, which might otherwise have been done by public money. Or do you mean that they're really finding a way of avoiding the debt ceiling? In other words, that they are accumulating liabilities, but there happen to be liabilities which are not going to appear on the balance sheet?
I believe you can answer positively those two questions you raised. Is that in this particular case, the city, the municipality, was not able really to get on their shoulders to reconstruct the railway station. So anyhow, it was not really possible for them to deliver the project, which is over, I believe, 40 million euros. They would never do it, okay? Well, on the other hand, it is true. It is an incentive because it is not on the balance sheet. So as you said, it could be that they are very induced to do that because this is not going to be reflected in the budget, okay? But still, in that particular case, and I believe this is something which we already start, let's say in 90s, is that, well, in the beginning, yes, indeed, it is a balance sheet. But then, when you look at the PPP projects in Europe, is that it's not only balance sheet, it is also that there is a project which could be financed from other sources than public. This is one, that this is transparent project, and there is a high public support for the project. If you ask citizens of Sopot, they all dream of one thing, reconstruct the railway station, because we have a beautiful city, but the railway station is so obscure, it's so, it's so spooky place to go to the seaside, okay? And the last point I raised that in the beginning, the Henry VIII. You might not know, but Michael holds a history degree from Cambridge, and because I spent some time in Oxford, I just wanted to express that somehow in Henry VIII quotation.
Well, thank you very much for that. We are slightly more than halfway through this session, and from now on, at any time that someone from the audience wishes to participate, I'll be very happy to take their question or comment. And I already have one at the back there. I can't see who you are, sir. Would you please tell me your name to begin with.
Surely. My name is Dave Wetzel. I was the first Vice Chair of Transport for London in the year 2000 when Ken Livingstone was the Mayor. The question I ask about this railway station deal is, for how long has the private sector company been given ownership of the land? Is it on a 70-year lease or is it an absolute freehold? The question arises because in about 60 years' time, your station will no longer be a new station, it will be an old station, and people will want it renewed. The land value underneath the station and in the area where the shops are will have risen in that time, and if it falls back to the railway company, then they can use the same deal again. If not, you've lost that land value to the private sector forever, unless, of course, you introduce a land value tax in Poland.
Very good. So that obviously is for you, Jaroslav.
Yeah.
What's the deal?
The deal is a bit more complicated. Is that the private investor, he actually is going to get the ownership of the land for the shopping center. The railway station is going to cede that part, and they will keep the ownership of the railway station for themselves. So they will get a new building, which I believe it's going to be there for 30, 40 years without any additional money. And then what the municipality is going to get is that they will get the land from the national railway station, or the company, because there are some roads around, there is park and ride, plus there are green parts of around the railway station. So it's really complicated. They've been counting the, how many acres, how many meters each party shall get. But this is not that the private investor will give back. They will keep it, and we suspect that they will try to develop, as that part that they have as possible.
Perhaps I could ask the panel a broader point, which is quite similar to the point that I last asked Jaroslav. In a session this morning, I believe a German minister commented that PPP was attractive to Germany because of the Maastricht criteria, which limit the levels of annual deficit and accumulated national debt. Now, there may have been some misunderstanding here, that's quite possible, but it sounded a little bit as though this was a politician finding a way around limitations on debt. In other words, parking things off balance sheet. Now, I think I'm the only former politician here, but let me just say that to me, this would matter very much indeed. I mean, of course, as a politician, I'd be hugely tempted to take a liability and hide it somewhere rather than having it appear on my balance sheet. But although I'd be very, very tempted, I would know that this was actually a sin and something that I really oughtn't to engage in. Now, many of you are on the kind of beneficiary end of this. You benefit. You have a vested interest. You want PPPs to be successful. But being honest about it, do you think that one of the reasons that it's being driven forward is that it is actually a way of politicians bribing the electorate today by giving them lots of nice things like roads and airports and railway stations and leaving it to a future generation to pick up the liabilities? Gershon, you seem ready for the challenge?
I think it depends, and I'll give you the reason why I say that. I also think it's a disaster if any government policy is driven by lawyers and accountants. That's a recipe for disaster. One criticism levelled against PPP is the over-engineered nature, the over-legality of it. I can defend parts of that, but it's incredible how the mindset changes when you spend 15 years with lawyers. I'm prepared to sit up here in between two eminent historians and actually argue, because of my experience dealing with these over-legalized contracts, that in fact Henry VIII had 4 wives, simply because of the technicalities around what constituted marriage at the time, around consummation and legal contracts. So the correct answer is actually 4, not 6. That's what legal drivers or accounting drivers can do to the mind. Of course he had 6 wives. That's the reality, commercial reality. So what is the minister saying? Well, he could be saying one of 2 things. It could, on the very negative side, be a very negative comment. Exactly that, bribing the electorate, trying to cover up the true cost of something. That's a disaster. Disaster for a long-term sustainable project. But he could also be trying to convince the electorate that actually sinking some costs now into a project will at some point have a beneficial revenue impact on the country, a growth story. And if that's the case put forward, then it's possibly a valid case. And that would be the positive side to the story. Off and on balance sheet is a spurious kind of concept. There is a lot of debate, academic debate around the world about whether governments have or do not have balance sheets, whether things can be held off and on various kinds of Eurostat methods of accounting, and so on and so forth. I don't believe these days that anybody buys that story. When Fitch, S&P, Moody's look at sovereign credit strength, they add back all of those liabilities. So there is no longer a case, in my view, to say that there is a valid reason for keeping something off the balance sheet, because there are too many falsehoods in that statement. But, having said that, investment can be made by governments and borrowings can be taken by governments, even though today there is no means of repayment. Traditionally, in certain parts of the Western economy, there is the concept of buying your home with a mortgage. Those people that are in those countries where that is the norm do not borrow for 1 year and try and repay that loan in 1 year for a home that is many, many times the income of the individuals residing there. And therefore you attempt to match the asset with the liability. And there is nothing wrong with that, provided at some point in the future growth actually emerges from the investment.
Yeah, BK. Yeah.
No, I think it is necessary to understand the whole thing in the correct perspective. And I would argue that it is not a device by the politicians to either defraud or take the people for a ride. And I have 3 arguments for that. First, see, whenever you build up the PPP, it has certain economic benefits for the development and growth purposes. Now, that results in extra revenues, on higher revenues for the economy, and we have seen in some of these studies done in the Planning Commission that it has actually resulted in better prices for people who had done, at least the road sector, it had done enormous benefits for them. So first, it does improve the economy, and as the economy improves and as the growth process improves, first of all, it has its own momentum. Second, the whole PPP, in case you take, it is important that those are taken up appropriately and the contingent liability are reflected on the government's balance sheets. And there is a method of reflecting those contingent liability on the government balance sheets that is well accepted by the accountant generals of various countries. In case of India, there's a process that whenever there is a contingent liability, it has to be reflected on the balance sheet in a certain way. So it has to be reflected on the balance sheet. The way amount which you are going to reflect has to be seen by the auditors, and it has to become transparent. And as mentioned, that these days the balance sheets of countries are very well scrutinized by the Standard & Poor and all the credit rating agencies in the world. And there's no way you can put in below the line some entries and hope that that will not really be seen by them. All that is seen. So that's the second point, that it is going to be reflected in the contingent liability part. Thirdly, the alternatives to that is treating people to a poor infrastructure and condemning them to a lower growth rates. Are we ready for that? If we are not ready for that, then I think we must see the other alternative. The other alternative is the private sector investments leading to opening up of the roads, the airport, the rail, the ports, leading, helping in the exports, helping in the movement of goods, and thereby improving the growth rates, and thereby generally improving the economy. So I think you must see that the other side of it also before we say that it's a device that way. To that extent, I feel that a fair comment will be that it's a process by which we are trying to help the development process in the developing economies at least, and the accounting part of it has to be seen as a contingent liability and appropriately reflected in the balance sheets of the countries.
Thank you very much. Any other panelists want to come in on this point, or shall I ask you another question? Yes, Yaroslav, yes?
I think I would like to raise that, which was already said by Jose, that this is also a very educational process. At least we observe it on the municipality side, is that, we got a lot of EU funds, so the municipalities were thinking how to spend that money. It was not a loan, it was sort of a donation that if you give 60% of the investment, you get 40% from EU funds. So we now observe that we have a lot of museums in Poland because the municipalities think the way to promote the city is to have its own museum. But I would never think about PPP as the museum. You know, that would be unbelievable to have PPP the museum. Perhaps there is an example. So I would say that we observe now that there is that dialogue between the municipalities and its inhabitants, citizens, about what is really important for us. If the municipality is not large, it's not a big city, then somehow they have to find the money. And it's not only, that it's not on our balance sheets. We would never be able to have the railway station in Sopot for next 50 years. So the PPP, in that particular case, that was necessity,
Yes, indeed. José Luis.
Just to add that probably it's not the time to make a statement that obvious that...
Microphone, please.
It's not working? Yeah.
There we are. Thank you. Sorry.
Maybe to highlight that perhaps that statement is not the right time to do it, given, say, what has happened in Europe. And I will go with VK that perhaps it's more the emphasis on the prudence around, say, how you manage the liabilities that you are incurring as a result of that, and the scrutiny that goes in terms of the budget appropriations and budget decisions that go around approving a project like that.
I don't want to create a scandal. I'm only going on what I heard, the interpretation of what the Minister has said. I'm not saying that that is what the Minister said. Alberto.
No, just a couple of words on the concept of a contingent liability. It is, again, a very broad term, and there are liabilities that are more contingent than others in PPPs, and all these annuities and availability schemes, they are not contingent liabilities, they are actual liabilities. There is a trick, and we are fooling ourselves. We're pushing a liability, but the liability is there. But there are other mechanisms in PPPs whereby the government can support the projects, make them feasible, and make them attractive to the private sector, such as minimum revenue guarantees, adjusting the concession period. There are other ways to do it rather than the straight, cleaner availability annuity type of deals. Just wanted to highlight that.
Any other contributions from the audience? Yes, sir. Let's have a microphone. Keep your hand up, if you would, so that the microphone carrier can find you. Thank you.
Good afternoon, gentlemen. My name is Miller Crockett. I'm the Vice President of a German software company called PTV. Just one of the observations is at this sort of level you talk about high investment, multi-million euro loans going everywhere. Taking it very down to the base level, I deal with yourselves, but I also deal with the junior transport planner who has to come up with the demand data for some of these projects and these programs. And sometimes it can be a very subjective matter. And that leads to some of the conflicts and the difficulties that you find when you then look at the financing and is the project actively viable or not? Because you get some governments who will want to make it look over-attractive to get the investment. And the question is, do the banks actually have some auditing process right at the beginning of these planning of these projects? Because that seems to me to be the key to getting people to trust in PPP again.
Where does the subjectivity come in? At the level of the person who's doing the data, or are you saying that then there is a political intervention?
Well, I think at both. There's a subjectivity to transport planning when you look at how many people will come on, let's say Crossrail's, a good example in the UK. What's the actual demand or the patronage we'll have coming from east to west and west to east? Someone's still doing some fairly base analytical data there. But then once that goes up the tiers of government, as you know well, Michael, you know, some people may wish to massage those because they think they can get investment funding from people like the World Bank or the European Union, put that into a PPP context, and, you know, when the actual thing's delivered, those numbers don't come to fruition.
So your question was really, do the banks have a way of monitoring the quality of the data?
Absolutely.
Yaroslav, in your case? Yes.
Well, it's very difficult to predict the future, but of course we emphasize that at least with the clients, that is in that case municipality, that we have to be involved in the beginning. That means that we start from the beginning, because they have to be taught how we deal with documents and how we try to make a transaction going on. We have to base our predictions on data. That data, we try to find the companies which are reliable to deliver that data. But of course, there were many projects when there was overestimation of the passengers to use the roads. We have that story as well in Poland with the toll roads, and then there was a discussion between the government and the private investor. But also there are some cases with the airports that the number of passengers was predicted low, and then because of the cheap airlines, it expanded. So it works both ways, I would say.
José Luis.
Maybe to add to this conversation about Oxford and Cambridge, there is a professor in Oxford, Ben Flyberg, that has devoted his life to analyze this issue. And what the point he makes is that it's not a technical issue, but rather more a political issue, that there is a lot of pressure to make the project, say, lower cost, for example, to pass through the budget discussion, etc. No? So there is a bias in that respect. And this bias, he has also found that when you have to recover the cost directly, for example, from users, it's also more difficult to get it right. Studies done by banks, for example, deciding whether to invest in a concession or not, have tended to be more conservative, but I think was a very interesting research also done by Standard & Poor's that showed that it's typically a bias, around, say, 20% optimistic projections. We try, when we approach a project, we try to do some scenarios, and especially try to see the variation of the potential variation of the main parameters, for example, costs and revenues, to see what are the consequences and what risks could become so catastrophic that need to be mitigated in a different way. Also, it's very interesting, the UK has a system where you have like gateways before you move a project in the approval process. Unless you have completed the feasibility to a certain level, you have to introduce an additional cost, for example, to be more on the conservative side. No? These are techniques that governments can adopt in order to ensure that they don't get it very wrong.
Let me provoke the panel a moment. Is there not a fundamental asymmetry between the government and the private sector partners with which it negotiates? And the asymmetry is in two parts. Firstly, that although the government is trying to transfer the risk to the private sector, if the thing doesn't work out well, the private sector can simply walk away or indeed go bust, and the state is left with the liability. The state is left with the road or the railway or the port or the airport. And the second asymmetry is that actually governments are just not nearly as good at negotiating as the private sector is. So that what happens is the government thinks it's transferred the risk, but it hasn't really, because the risk ultimately lies still with the government. And secondly, the government pays a much higher price than it thinks it's going to pay, because actually the people on the other side are better at negotiating. Discuss.
I'll take the challenge. Obviously, there's all sorts of experiences. It's gone both ways. In our portfolio, we have, as I said, 24 roads. We have roads that have overperformed and are excellent assets. We have roads that we would give back to the government any minute. And the fact is, as you said, the road is there. They take the liability. They have to operate it. They have to maintain it in the long term, but they have an asset. That's a fundamental part. So let's not forget that I've seen very, very little projects that have gone bust during the construction stage, and all you find is some pieces of road here and there. Most of the projects are completed, and maybe the revenues are not there, the company goes bust, but the asset's there, it's in the country, and it's benefiting the economy. So then in terms of the power of negotiations, again, it goes both ways. Maybe they're weaker at negotiating during the initial negotiation stage, but the government certainly is stronger in terms of wiping the private company once the project is up and running, and we are suffering some of those processes right now in different stable, mature, with a strong legal framework countries at the moment. So again, there's mixed experiences, and it can be seen both ways.
BK. Sorry, had you finished, Alberto?
Yeah. No, I just wanted to point out that when the contracts are properly drafted, the example I was going to bring up is the 407 ETR in Toronto. The 407 ETR in Toronto is a project where the developer, where we participate, paid $3 billion Canadian dollars to the government, day zero, for the right to operate the asset. We've invested over $2 billion Canadian dollars since we are managing it in expansions, improvements in the network, etc. And the road's still there, and it's been highly used. It's gone through the recession with traffic increasing year on year, even though the tariffs continue to go up. So when the assets have the fundamentals, and when the contracts are drafted correctly, the possibility for failure is much lower. Chile is another great example, how they did the first round of concessions. All those concessions have been extremely successful. They've gone probably through a first round of divestment and recycling equity. There's very good experiences. There's also very, very bad ones.
BK.
No, you see, it depends on the way your model concession agreements are designed and the way you have allocated the risk. In our case, we have found that we have a provision that in case the developer is not able to move forward and make the roads, then there is a specific provision that government can take over. And as far as the developer is concerned, his equity, and to that extent it remains sunk, and the government takes over both the debt as well as up to a certain extent, say 90%, and the equity is with the government. Then all that equity invested by the developer, that's plus the funds, government is in the business of building roads anyway. So they can with that build up the road. So first of all, there is an asymmetry, but the way it is designed. As far as the developer is concerned, he also has the option that after a certain period, he can sell his equity. So after 2 years or 3 years, he can sell his equity depending on what the market is, what he feels that he is not making enough profits in that. There are provisions, and there are many funds which are prepared to buy the equity. And with that, then the developer is well protected. So unlike the fact that he is there for life, he has the right option to sell the equity, and that's after 2 or 3 years of the project or road being constructed. So to that extent, he is very much on the protected. In certain cases, we have also got regulators where the developer can approach the regulator, say in the case of airport. He can approach the regulator and say that these are the terms and this is what has happened, and the regulator does listen to it and then take an appropriate provision consistent with the terms. So the broad point is that it will depend on the way you have designed your model concession agreements and the way that risk allocation has taken place in the model concession agreements. If you have taken over all the risks, if you have guaranteed all the revenues, then I'm afraid you are sunk. But if you have only guaranteed the periods for which he is being given, and as was mentioned by my colleague there, that there is always possibility in case of difficulty of saying that renegotiating and or saying that, okay, we can extend the period of concession, say, for another 5 years or this thing. That is possible. So the broad point I'm making is that these are workable propositions because you have got these flexible provisions. And the risk allocation is going to depend on the way you have designed your agreements. And there are pluses and minuses for both the sides, for the government as well as for the developer.
Very, very good. I think Gershon was provoked. He looked provoked. That's how we go.
I think it's broadly dealt with. I mean, project failure in construction is rare. And generally, if a project fails in construction, there is something dramatically that's probably gone wrong on both sides. When a project exists, but the revenues fall short, the first call on that failure is equity. That's private sector money. The next call is generally the debt providers. But if all fails, as pointed out, government's got its road. There may be an argument about the long-term cost and maintenance budget, an evaluation over that to be debated. But again, in the right PPP framework, that will have been properly measured out in a fair way if a failure occurred. So I think the challenge you set is not met with the evidence. And if you look, for example, in the most developed PPP market, which is the United Kingdom, independent after independent analysis of PPP since its inception doesn't actually bear anything close to the volume of noise, negative sentiment that has been generated. There are various reasons as to why the negative sentiment has been generated, but it doesn't actually stack up against the evidence, and the evidence far outweighs a lot of that noise, and actually time after time shows that if you had compared a traditional procurement versus the PPP model, the public sector would have been disadvantaged in probably more than 8 out of 10 cases if it had been developed in the public sector. In other words, 80% of all, I hate using statistics because it's pretty unfair, but the fact is that under the evidence that's been produced to date, almost 80% of all PPs procured have actually come in on cost and on budget. And you were a previous politician, and I challenge you back, not you because you're a moderator and you're a lovely man, but to think in political terms to how many countries have procured things in the past but have had no idea as to the cost, the time, and all of the variations that were put, and a feeling as to whether the public really did benefit from a state procurement versus a partnership.
A perfectly good point. But while I've got you there with the microphone, could I also ask you one other point? I began, right at the beginning, mentioning that one of the advantages is that presumably the private sector is more efficient at design and management than the public sector, so you've got a big cost saving there, at least potentially. On the other hand, what has happened is that legal and advisory costs have been enormous. So how do we do the sums here? In the end, have we gained more from applying private sector expertise than we've lost on the armies of lawyers and advisors?
I think there is, I would say, a fair challenge, and it's fascinating and disappointing that over 15 years of evidence in the UK, and I'll use evidence in a negative sense now, that there has been no decrease in the associated fees surrounding a project procurement under the PPP model from when it started to where we are today. And that is a very interesting dynamic that a lot of people have yet to kind of get their heads around. However, my observation on it is to get the partnership correct, to get the terms correct for a long-term duration is complex. And perhaps we shouldn't shy away that this is complicated, that it does involve measuring best we can, to your point, all of the associated risks best we can, to try and allow for those contractually best we can. And that is a complicated issue. My challenge back, in a sense, is this is some kind of accounting, some kind of way of doing something that had never been envisaged historically before the advent of this type of partnership arrangement that relied on a long-term contract. So I hesitate to kind of even, and shudder to think, of the associated advisor fees that were incurred by states in the past, which bore no resemblance to the outcome of the project and the success of the project, but were simply sunk costs of a civil service that was doing this activity anyway. At least now we know what the costs are. At least we have transparency. Now, it's disappointing that we can't seem to make an improvement over time in those costs, but at least we know what they are. And I think that has been a tremendous achievement from where we started perhaps, several decades ago.
Both José Luis and Jaroslav want to intervene, so we'll let José Luis go first.
Just to add a quick point here, it's a good time to bring the issue of asymmetry in capacity, particularly in the public sector. And clearly, you can see the access to resources that a private firm can have, and then the difficulty that the private sector can have to have same level of access, or the continuity of the teams. And if we want, and I'm mentioning this because it's in the best interest also of the private sector, that the public sector side has developed that capacity and a better understanding of how to manage PPPs in the future. We see a lot of ad hoc teams that then they disband when the project reaches a certain cycle, and then we lose that capacity. This is something that we have to figure out how to be able to more consistently develop that capacity and retain that capacity in the public sector.
A valuable point. And Jaroslav?
Yeah, well, I think we focus too much on the final stage of the PPP, that is the agreement, and we say that we pay lots of money for writing those clauses correctly. But we forget that this is not an easy process, and it doesn't take just 1 or 2 weeks. The project I was referring to, it lasted 5 years. So it started in 2008, and I signed the documents in 2013, in January. So we have to think about advisors and lawyers, and I'm not, a great fan of them because I have to sign the bills, and I don't like it very much, is that it's not only the agreement, it's also the bidding process, which is very important to deliver good results of PPP. It's the way you auction, the way you discuss things, and being a part of academic, just look at the Professor Ackerman, The Market for Lemons. He got the Nobel Prize for that. And it's during the bidding process, you have to signal what is going to happen in the future. And that was not Ackerman, but the others, the followers, who developed the signaling theory to lower the asymmetry of information. Is that, well, it is not a piece of cake. It's not 2 weeks negotiations. It's 1 year, 2 years, and then at the end, well, someone has to pay the bills. But still, the road is there, the station is there, and I think it's worth, because otherwise we don't have them.
Very good. We've got 6 minutes left. Does anyone from the floor? Yes, sir. The microphone is yours.
My name is Flausch. I'm the Secretary General of UITP, International Association for Public Transport. I think the debate is very interesting, but most of the people around the table seems to have a favoring PPP. So maybe it'll be a little bit provocative in that respect. First of all, on the money side, if we want to get some money, is the money, public money, a bit cheaper than private money? So basically today may be the same. So there's no real advantage from a funding part. On the efficiency of the private sector, there are mixed examples. I mean, the famous London PPP was really not the best example for that, but there are a good example where, indeed, efficiency of the private sector was bigger than the public sector. Okay, that could be a case there. But then finally, unfortunately, I think there's many cases where government has been trying to go around their own balance sheet constraints. And if you look at what happened in Spain with the Metro of Madrid, where finally it was built by a company set it up by the government or whatever state entity, and it was later on disqualified by Eurostat. Fortunately, at the time where there's no crisis, so it could be swallowed by the information I have is official information. So I'm wondering whether when you go to the doctor and you have some fever, obviously you ask him some aspirin to get rid of the fever, but you also ask, why do I have the fever? And my question is, would it not be simple to change the rule of public accountancy and just allow state for certain specific investment, like infrastructure, and we could try to define it, to be allowed to depreciate them on the long run? Because the trouble basically today in Europe is that it's this net cash, the position of the state in terms of, what do you call it, the word in English, but it's the net position of the state in terms of debt, which is really influencing all the politicians. And so they want to get the infrastructure, what they got in Spain, for instance. What's the good part of it is that they have a fantastic metro in Madrid. But by the same token, if we were changing the rule and allowing people to depreciate a tunnel of a metro on 50 years, there would be no problem, because finding the money is always easy. Yeah. It's just having the burden of it which is difficult.
I have a feeling that Professor Amartya Sen might have been on a sort of similar point this morning. This idea of kind of virtuous debt, that we should be able to say that some things are things that you should be allowed to get into debt for and treat them in a different way. Now, we've only got 4 minutes, so 30-second reactions to that point. Yaroslav?
I think it's not so simple. When you allow a loophole for the politician, that's quite risky and dangerous, because then he's going to define that the infrastructure is not only the underground, but also the tram, and then the buses, and then at the end, the bankers would have to pay for that.
Anybody else want to make a quick reaction on that point?
Very quickly, I'd just say that upfront construction costs are very different to whole life management costs. And what you may have in your budget today, you may not have over 30, 40, 50, 60 years. So by definition, because a particular municipality is in funds, does not make it cost effective to fund long-term infrastructure using that money.
Yeah, BK.
I think also that we are spreading the risk large number of private players, and to that extent, if all of it is taken over by the state, then God forbid if some of it fails, then the amount of fiscal deficit and the amount of fiscal sort of insolvency which the state will occur, I think will be many times of many states are in Europe are facing, and many countries in developing economies may face.
So I'm sorry, our last questioner has not got an enthusiastic response to his suggestion. However, I do think, sir, that you did have quite a good point, that our panel here has been a panel of enthusiasts, which perhaps is not very surprising at the International Transport Forum. You might expect a certain balance in the panel. I hope that you may feel that I have attempted to introduce a note of scepticism into the discussions. But certainly, I want to thank all our panellists for their remarkable contributions. Alberto, José Luis, Yaroslav, Gershon, and BK, thank you. And could I thank the interpreters very much indeed? I've not had any need to use the interpretation service, but I can hear you vaguely talking away. It is a great challenge to interpret such a free-running discussion, so thank you very much indeed for your work. Thank you very much, everyone, for being such an interested and participative audience, and I hope we'll see a lot of you at the President's reception later.